Focus on stocks. We have Prakash Diwan, market expert, who joins in. Hi, Prakash. Morning. Quickly, if you could ask you about Kotak Mahindra Bank, a relative underperformer, valuation-wise, not too expensive in comparison to history, and also now, in fact, in a difficult environment, numbers look good. Your take on the stock?
Good morning, Nigel. So you're absolutely right. In fact, I like the numbers. When you hear the management on some of the parameters that otherwise would have seemed worried, they're very clear. A conscious attempt by the bank to keep its net assets, net non-performing assets, to be in a particular tight band, and that usually has been followed by the bank every time they have lunged for growth in the subsequent quarters. So my sense is they're trying to time their credit growth, their expansion of the book, with the interest rate softening, and that could happen probably as early as first quarter of 26 itself. So look at the numbers from a slightly longer term perspective, and you'll probably see that they are probably at the best. The profits have increased in the last 3 years. The stock hasn't gone anywhere, but this is where it's poised to kind of start making a big difference. So relatively, and you look at Axis, or you look at some of the other banks, you feel that Kotak is probably better placed, and the subsidiaries have contributed so well. So there's definitely, that's where the profits coming from significantly. My sense is the core banking area will also kind of start contributing while consciously expand on the book side.
Prakash, very quickly before we hit the break, Wipro, 281 on the stock, end of trade on Friday. What's your call?
So very good numbers, agreed. And you must give it to the management to be able to turn things around on an operational basis rather than just some new deal wins adding to this improvement. So yeah, but I would definitely like to see the overall environment improve, and then Wipro take part in that. So let's wait just 24 hours and things could be very clear for IT names. But yeah, it does stand out as one of the best earnings of the season till now. Let's look forward to this quarter also going well, and then you could take a call.
Prakash, let's speak about the banking number that will grab attention, probably for the wrong reasons today. RBL Bank, very, very disappointing numbers. The stock has been a big value eroder, but I mean, the numbers are even weaker than what the street was anticipating. Your view on the stock?
No, absolutely. See, what happened is the previous quarter you had the Bajaj Finance disengagement impacting it significantly. And then this time it's microfinance that's just started, rearing its ugly head. So this is a bank which needs a severe repair for sure. They don't have the distribution strength to quickly grow in terms of assets, which start making percentile, numbers look better in percentile terms. But my sense is they still don't have a very decisive leadership and plan to kind of go ahead and spread themselves into the right pockets, newer segments and all of that. So there's a lot of struggle. Of course, the market sensed this coming. So in a way, it's already lost a lot of ground. Today's reaction could probably be again a bit negative and knee-jerk, but it probably doesn't have much to lose from here, is my sense. It's probably close to the bottom, if not to the bottom. So let's look at that reaction first. But yeah, there's nothing very positive to look at the bank at this point in time in terms of buying into it.
Okay, all right. Let's talk about a couple of other names then. Hitachi Energy. The stock had a one-day run because of the hope that, in fact, the big orders are going to come in. And that's started seeing the light of day. Now they're talking about raising some capital. I think the parent already has close to 74-75% stake in the company. So they have that leeway in terms of raising equity. Your view on the stock?
Very well placed kind of a name, Nigel. As you said, great pedigree, it's sitting in the right spot. But at the current valuations, it doesn't really leave much of a re-rating potential. They'll continue to do well. In fact, they will have to do well to justify where they are. My sense is smaller companies in that value chain where, which are yet to be kind of reaching scale and operating leverage, that's where things will start kind of contributing more. So I would celebrate the numbers that things have started looking up. The parent will continue to get that order flow in. But I wouldn't want to buy at closer to 13,000. It's definitely very expensive in that space.